Hello everyone. Quick microphone check. Just check everything's okay. All is well. Loud and clear. Yes. Sorry the fan's a little bit loud. Laptop tends to throw a bit of a hissy fit sometimes. Just going over a few things that I've been sort of looking at this week. Sort of re-looking at my ETF side of things, just seeing if I want to take any changes, and sort of reviewing the various cryptocurrencies, just sort of seeing if anything crops up as unusual or anything I want to be looking at. I noticed CoinMarketCap has still got the sort of jokey Wall Street bets coin at the top. Obviously it doesn't exist, so in case anyone's sort of been on here and wondered what that is. Just wait for a few more people to come on. How's Josh? Do have another little bit of money to put into the portfolio this week, so doing a bit of research on what to add to this week. But yeah, drop any questions in the comments and we'll get started. I've still been looking at topping up even more of what I've been buying the last few weeks, really. Sort of FedEx, Lockheed Martin. I'm being boring buying the same stocks, but they're still sort of hovering around lows that I was fairly happy to buy in sort of the last few weeks, so I'm continuing. Lockheed still projecting nice earnings figures for the next sort of couple of years. So I think that's going to get added to probably the next couple of days. Looking to put in about £750, I think. So get a little bit of them. Probably still looking at maybe a bit more Johnson & Johnson. Probably a bit more Nintendo, actually. It's a little bit more difficult to get good information on Nintendo. But they've had a little bit of a reduction. Reasonable sort of value for Nintendo. You're not going to get them from the sort of previous history they seem to have. You're not going to get them at particularly low PEs. I think 20 sort of seems to be a reasonable price for them. So yeah, this year seems a little bit high for them. Next year is going to be a little bit lower. I think next year, unless they sort of or in the next sort of 12 months, unless they come out with a new console. Probably going to have a bit of a slow year, I would have thought. I kind of thought they were going to come out with something new, so we'll see, but it seems a reasonable price for them, and I haven't got too large a position at the moment, so I will probably add a little bit to that. See if we've got anybody more in. Hello, people. So, a few questions. What is my best performing stock so far? Actually, I believe this is the very first one that I bought. First Majestic Silver. So it took a massive rise yesterday with the silver price rise, and has then given pretty much all of that back today. Silver's seems to have dropped basically as much as it went up yesterday, but it's still sort of doing pretty well. That is 128% up. That was bought just when the new tax year opened in April. So yeah, that sort of rocketed up yesterday, sort of partly due to this, it seems like, Wall Street bets activity, hedge fund activity, whatever it was. I know there's debate about whether it actually was Wall Street bets, but yeah, that sort of pushed it up and it's come back down again. But yeah, I think in terms of a sort of a real position, that is probably my best performing one at the moment. I think there's two in my little ARK Invest pie that have done slightly better. But they're only sort of £70-80 positions, so I don't really count those particularly as best performing stocks. I think I've got Intellia Therapeutics is up 187%, but it's £80, so yeah, I don't really count. I tend to look at the ARK Invest pie, my genomics one, sort of all as one position, and that is up sort of about 20% since I started basically having that as a genomic pie. So yeah, it's First Majestic Silver. Yeah, silver small correction. I mean, it's basically where it was on Friday, so not the end of the world if you just assume the Wall Street bets thing didn't happen and go back to Friday, then it's fair enough. Simon, what year did I start investing? That was 2019, March 2019. I got into stocks. I'd saved up quite a bit in cash. I was in a offset mortgage account, so I was sort of effectively saving about 2.7%, offsetting the mortgage, and I thought I could get better return elsewhere, obviously in stocks, so decided to put that. It was about 40,000, sort of 20,000 in March just before the tax year, and then another 20,000 just after the new tax year opened, and that was sort of basically left for until April last year, until the new tax year opened. So yeah, March 2019. Sadiq. Long-term investing strategy is mainly sort of dividend stocks, value stocks. I'm not really a growth investor. It's just I don't really know that well how to analyse them. A lot of it seems to be sort of on faith, basically, not blind faith. Obviously, people are looking into the companies a great deal, but it's sort of predicting the company's future rather than looking at any real sort of fundamentals, because all of the sort of price to earnings ratios and even the balance sheets will often look relatively poor, except the very largest of them, the sort of Facebooks and Apples. So yeah, basically dividend investing and yeah, a bit of value. Don't mind some that don't really pay too much of a dividend if they're undervalued. Looking for sort of 7% ish, 7 to 10% total return every year. So if that comes from part dividend and part price appreciation, then that's fine with me. How much from payment in my job am I putting in monthly? Probably at the moment probably about half my salary, because obviously lockdown, not really spending too much. I did save up quite a bit before I moved out, so mortgage is relatively short, relatively small. So yeah, I'm able to put sort of a reasonable amount in. Most been putting sort of about 1,000 a month in, maybe a little bit more. So it's not too bad. Sort of fluctuates a little bit, but probably around about 1,000 a month. Will I put the 20k in all at once in the new tax year? Well, kind of stuck now. I mean, if you've seen the any of my sort of videos, I'm up to about 47,000 in the invest account now. So as soon as the new tax year opens, I'll just sell 20,000's worth of that and put it into the ISA. Probably the trading 212 ISA. I don't see any reason to sort of be topping up my others. Trading 212 seems to be perfectly fine. I haven't had any issues with it. So yeah, it'll probably be just sell 20,000 in the invest account and put that straight in the ISA. And I keep any new money at the moment is all going into the Trading 212 invest account. Thoughts on the best stocks in 2021? I mean, that is kind of depends on what type of investor you are, really. If you're sort of going similar strategy to me, then maybe you would be buying similar stocks to what I'm buying. I've been sort of buying things like Lockheed Martin, FedEx, Lennar, that sort of thing. I quite like Nintendo. Depends, if you're after sort of more growth side, then I still like Alibaba as a sort of growth, but with a little bit of value. Seems to be sort of growing similar rate to Amazon, really, but without sort of Amazon's high price. Sort of price to earnings ratio, comparison between the two, Alibaba seems a hell of a lot cheaper. Probably just because it's Chinese and people have suspicions, and maybe some of it is true, but I think they're a big company. There'll be a lot of people getting sort of screwed over if it is fake financials. So yeah, I quite like them. A lot of people saying Facebook are quite cheap at the moment, but I'm not really into the growth stocks, to be honest. So yeah, probably any of the new ones that I've been adding to in the last sort of month or two in my invest account, really. After I sell out of bullion miners, what industry am I going into? Well, the gold and silver stocks are pretty much all in my ISAs. So I'm looking to have more. Well, I'm looking to have all of the REITs in my ISAs, and they're not particularly big positions at the moment. So probably if I were to sell any in the next few months, I think it would pretty much all get put into REITs, between the UK ones that I want to hold and the US sort of Realty Income, Stag, Yeah, there was Digital Realty Trust and American Tower, and then the sort of UK healthcare and care home ones would probably put a fair amount into those, and Tritax, Big Box and Eurobox. So I haven't got even £1,000 in any of those yet, so yeah, it would probably be going into those. And I'll leave the dividend stocks for now in the invest account, because it just seems to make sense, sort of tax-wise, basically. You've got the dividend tax allowance. I'm not really nearing that yet, so yeah, makes sense to split it that way. Thoughts on Ethereum making all-time highs today? Is it getting there? I didn't think it was quite that high. Let's have a look. So take the market cap off. Oh wow! Yeah, I didn't realise it had risen quite that much. So it's past the 2017 high. It is. So it is at a new all-time high. So if you zoom in a little bit more, yeah, $1,525. Very nice, very nice. That'll help the portfolio. Obviously, Bitcoin's still sort of lagging around, up a little, getting towards the sort of 40,000 that it was before, but Ethereum doing well. I am very bullish on Ethereum. I maybe don't hold as much as I should do. I haven't really sort of bought any for a long while. Just kept my sort of 22 I think I'm down to now, but I wouldn't be looking to sell just yet. Still think it's got a little bit further to run before I'd want to be selling anymore. If I was a beginner and have £1,000, £1,000 is sort of very difficult if you're sort of not going to be adding too much to that anytime soon. Then you may get a bit tired of sort of taking the slow approach. You might want to take a little bit more risk if you can afford to lose it. You could go for sort of whatever really, maybe some of the volatile growth stocks, or maybe something in crypto, maybe something like an Argo blockchain or something. Depends if you can afford to lose that money, then maybe go for something a little bit more risky. I mean, if you put it in a sort of safe, dividend value type stock, then you're probably going to be getting less than £100 return in a year. So it maybe doesn't seem as sort of appealing. But if you want to be adding, starting with 1,000 but adding to it, then it may sort of, you may want to go for a more safe approach. But it depends on your risk tolerance, really. Favourite UK REITs, Josh? I'm still watching Segro. I haven't put anything into them yet. I do like Tritax, Big Box. Although Tritax Eurobox, I think has probably been getting hit a bit more because the EU sort of obviously more locked down than us. But yeah, so I think they're maybe a little bit better value at the moment. I do still like Assura and PHP, the healthcare ones, and I haven't put anything into them yet, but Impact and Target Healthcare, they'll probably be the last ones that I look to get into, just because they're more sort of very safe, 7% growers. So probably less upside on those, but once I've sort of reached my target, I'll be happy to just have that in those. Sylvania Platinum, I haven't actually seen the date for their announcement. I keep sort of looking, trying to find when I think the end of sort of quarter results were due about now, but I haven't seen anything on them. I'll have to look it up, see if I can find any more info. I guess the special dividend announcement hasn't come out yet. So I would have thought the price would shoot up, but I do need to do a little bit more research onto them. How long to keep it? I was kind of thinking maybe take some off the table at about £1.25. I'd maybe take a quarter of my position off. Still sort of deciding how much to do. But yeah, it's obviously not something I want a huge position in. I mean, it is sort of really still a penny stock. So yeah, I'll be sort of periodically selling out of that, maybe sort of 125 and then another quarter off, maybe even 150, to be honest. I mean, it's nearly a quarter of it is a quarter of my trading 212 ISA, so it's obviously a big exposure. Ethereum going through the roof, yes. Coinbase I've seen a lot of people saying they're struggling with Coinbase. It's very frustrating. Obviously, I signed up, 2 or 3 years ago when very little people were looking to sign up, so registration was quite quick. I think it still took a few days getting ID verification and that sort of thing, but yeah, 10 days is a bit sort of a bit rough. But keep with them. I mean, maybe try someone else. You could try Binance. Binance is the biggest one in the world, I think, but I sort of see some bad reviews. But yeah, Coinbase is sort of the best known one, but I think by volume, Binance are the biggest one in the world. But yeah, maybe try a couple of other sort of avenues, or maybe go for sort of a stock-based one, like something like Argo Blockchain, or one of the other sort of stocks linked to that. I do wonder about things like MicroStrategy. I mean, they are still a company, they just happen to own a lot of Bitcoin, but yeah, that's maybe a more risky one if you want to get in right now. Best volatile growth stocks, that's not really my area, to be honest. I mean, we'll say Tesla if you're into the very volatile stuff, but I just at the moment certainly think they're pretty overvalued, so I'm not really keen on them, to be honest. I wouldn't want to be recommending putting a lot in to hold them longer term, but maybe get on the I sort of tend to visit the Paul Briscoe Discord, get on the growth stocks bit in there. A lot of people sort of recommending a lot of different growth stocks. That's probably sort of more their area. Anish, thank you for the vids, no probs. When did I really start to notice significant gains from investment? Probably I bought my Bitcoin back in 2013, and that sort of rocketed up as I was buying it. And then sort of after holding a long while, the sort of 2016 and 2017 bull runs in crypto really was sort of when I realised you can do well. As far as stocks, just sort of getting in March 2019, bought sort of I pretty much put over half of my money into the gold funds, that you see on, or the BlackRock gold fund that you see on my videos on the Hargreaves Lansdowne ISA. Yeah, and that went up sort of, whatever it is, 70-80% in a year. So kind of thought, stocks is for me. So yeah, 5 years, 10 years, I guess it was 1 year since starting investing in stocks, but maybe for crypto, sort of, yeah, it took 3 or 4 years. Key to saving as much as possible early as you can. Yes, I think so. I mean, like the chap above, Simon, sort of saying, if you're starting with £1,000, you're going to have to sort of be in some very risky stuff to sort of see, noticeable gains from that. I think at the very start, as much as possible as you can save is probably the best way. You're going to see more return from how much you're saving, as opposed to return on the actual, gain in your stocks and dividends and that sort of thing. Obviously, as you get later on, if you've got 100,000 invested and you're getting, 10% return, it's 10,000 return. You may be putting in £5,000 a year in it, so you're getting double in the return as to what you're putting in. So yeah, later on you sort of probably start to go a little bit more defensive, and early on you sort of put a lot in and maybe take a little bit more risk if you want to take the risk. Can't sell Bitcoin to GBP on Coinbase. That seems strange. I've been selling to GBP on Coinbase Pro, not on ordinary Coinbase, but I haven't had any issues the last sort of couple of months. They only allow you to sell to PayPal. I do have a fully linked sort of Swift-based bank account, so I can do bank transfers either way. But yeah, haven't had any sort of particular problems with it. Anish, mainly bought when the markets were low. Well, I did sort of start in March, as I say, 2019, so that was a sort of reasonable time for markets, and then I was sort of saving up, basically in a general investment account, ready for the ISA new tax year in April. So that happened to sort of coincide with the bottom. So I was then opening the new ISA sort of in April when everything was crashed. So that was how I was able to get things like First Majestic for a reasonable price. And sort of a lot of the other stuff that I was buying has now done well, although a lot of my investments have underperformed, say just an S&P 500 tracker. So you don't always win. I sold the Greatland Gold position. I mean, it's not a miner, it's a sort of small exploration company. It wasn't really something I'm particularly knowledgeable on, really. It's a lot more difficult to analyse them. Obviously, they don't have any revenue or earnings or anything. They are just being essentially funded to sort of drill and explore the site that they own, and sort of the return on them entirely depends on what they find. So I wasn't too keen on holding that sort of longer term. So yeah, I got a nice gain on it. It was actually a tip from one of the guys in the Paul Briscoe forum. So as I say, made a little bit of money on it and just decided to to get rid of that. But nothing against them. If people want to hold them, then that's fair enough. How long will I hold Sentiment for? Kind of thinking it'll recover. They're having sort of bit of issues with their mine. They had shut down last year. I think due to sort of tremors in the mine. So they obviously have to do safety checks and that sort of thing. I think they downgraded how much they were going to be mining, but it still seemed to be sort of a decent projection. Seemed like they would earn a decent amount, and so it was being undervalued, in my opinion. So it probably won't get held any longer than any of the others, really. I'll probably sell out of them sort of similar times, really. If you watch my sort of gold cash out and Bitcoin cash out video, sort of detail, a very, very high level, approximate time as to when I'd be looking to sell out of all of them. Sort of targets, hopefully in an ideal world, gold gets to say $2,100, $2,400, maybe $3,000, and I'd be selling portions of them as it rises to those levels. Thank you, Anish. See you later. Yeah, hope I've helped. Am I bullish on Argo? I don't know sort of a huge amount about them. I just sort of kind of wanted a little bit more, speculation in the crypto, in my ISA, really. I got the Bitcoin ETP. I did sell out a lot of that, just because it was up really high and I wanted to sort of take a little bit of profit. And there was some other stuff that seemed pretty low I wanted to buy into. But yeah, seemed pretty good. Seemed to track the Bitcoin price fairly well. Bringing new cards online. I think they're making a lot of investment, so they should grow their mining output. So fairly good if we're going to have a decent rise in the Bitcoin price. I mean, even in theory, if the price stays the same and they're expanding, then should do fairly well. It does depend on how many miners worldwide do want to come on, though. So if you get a load more miners come on, the difficulty rises, and I've sort of been saying this to everyone, really. Their costs can go up significantly, where the Bitcoin price doesn't necessarily have to. Where, say a gold miner sort of has their mine, they have sort of relatively fixed costs, really. You've got a price of labour in the mine, the price of oil and that sort of thing, but things don't fluctuate all that much. So if gold price goes up, then their costs stay relatively the same. Whereas sort of Bitcoin, when the more miners come on, when the price goes up, you'll get more miners come on likely, and the difficulty will rise, so their costs rise. But it should still do fairly well. Any thoughts on small gold explorer penny stocks? Yeah, like I say, that was sort of what the Greatland Gold position was. I'm not sort of too knowledgeable on sort of picking out the small ones, picking out a Greatland Gold before it gets big. I mean, you could have made sort of thousands, could have been 100 times your money if you were in Greatland Gold back at the beginning. But I'm not really one to be sort of picking these, small growth stocks. I mean, it is essentially a growth penny stock, even in the gold market. So I tend to go for companies that I can sort of look at their earnings and sort of base the purchase on that. Viral, hello. what's my take on Kia? It's a slow burner. I know. I sort of keep scrolling past it every time I log in on my videos. Seem fairly good. They do make very, very small profit margin, but they do a lot of volume, and I just see them as undervalued. Probably will hold for a bit longer. They sort of had a spike last year up to sort of £1, I think it's £1.30 or £1.40 or something. So at 70p at the moment, I think all it takes is a decent sort of financial statement. For them to say they're paying down debt. They've got new contracts that are going well. I think they've got the volume there. In terms of contracts, it's just how much money they're making out of them. So if they were paying down debt, people sort of see that as, them doing reasonably well. And obviously, if they start to make a little bit more money, they're only at, I think, a PE ratio of about 2 or 3, even in terms of forward PE. So, as I say, sort of one good earnings report and they could shoot up. So, yeah, I'm holding them. I appreciate it's just going to be a slower grower than some of the others. Aston Martin, yeah, I've seen the people going in for Aston Martin. It's not one that I've sort of looked at too much. The sort of car side has pretty much never done particularly well. I think I saw sort of they've gone bust, 7 or 8 times or something, and people are sort of part betting basically that they're not going to go bust again, and part betting on the sort of F1 team, which just seems a little bit too speculative for me. They're not tiny market cap. I can't remember what they're at now. So Aston Martin, I think it was sort of $2.6 billion pounds. I mean, yeah, for someone that could potentially go bust, at the drop of a hat, it's not one for me. Thanks, Alex. Yeah. Wondering when Rolls-Royce will bounce back. Yeah, I mean, I held them a few months ago, got out when I think sort of round about when they announced the rights issue. Just sort of thought price was going to drop. It did drop a little bit. I didn't really want to buy into the rights issue, so I'm out of them for a fair bit. It may bounce back before I invest again, but I think I would rather sort of miss out on that gain and just invest in them when they're a bit more stable. They're still on the long-term stocks, hold list, because I do want to own them, but yeah, not yet. Seem horrendous. They seem a little bit overpriced for sort of how much money they're not making money, they're losing money, so yeah, I kind of would have expected them to be lower. I think Rolls-Royce, I'm always looking at Rolls-Royce, Boeing and Airbus, and for the amount of activity that's going on, or lack of it, I just think all three are fairly overpriced, especially Boeing. Airbus obviously are doing well off Boeing not doing so well, but not as well as they would have been if not for COVID. So yeah, just can't see it with any of them. Haven't put a penny in any of them yet, and don't plan on any time soon. But all three of them are still long-term watchers and ones that I would like to hold. Josh, how come I don't hold Persimmon or Red Row and own most of the other big ones like Taylor, Barrett and Kia? I think I have answered before, but it's Red Row is not one that I've looked particularly into. There isn't sort of a huge reason not to hold that I don't hold Redrow. It's just one that I've not looked into particularly. Persimmon is one that I'm sort of not that keen on. It is on my little watch list that I keep on Hargreaves Lansdowne. But unless it sort of goes crazy cheap, just for the fact that they've got a very poor reputation, there's always a huge amount of people complaining about the quality. Just think, they probably make money because they do a lot of volume, but they're the cheapest sort of new house builder really in the country as far as I'm aware. So they've just got that sort of high volume, low price, Weatherspoons type mentality almost, which not really someone that I want in a house builder. I think Wimpy and Barrett's sort of have that, little bit more premium quality to them, but so then that also means they can charge a bit more and hopefully make a little bit more money. So gives them that stability that I don't think you get with Persimmon really. Obviously they rely more on volume, so if that volume gets taken away, then they're not making the small amount of profit that they do make per house. But yeah, nothing against them. They are still on my watch list. Come April the 6th, could you transfer your 212 Invest account in cash to the ISA side? Yes, you have to. I mean, you can't transfer it as such. You have to sell everything and withdraw the money. I'm not actually 100% sure how that works because I've always moved my ISA to a new provider or just opened a new one. But I would presume you have to actually withdraw the money to your bank and redeposit it in the ISA. Don't quote me on that, but I would imagine that would be the case. So yeah, you would sell everything in your Invest account and sort of rebuy if you want to buy the same things in the ISA side. So yes, it will all count towards your ISA allowance. That's what I'll be doing in April. The Weatherspoons mentality. Yeah, I mean, that's sort of how I see them really. Weatherspoons haven't exactly got the best reputation, but everyone knows they're cheap and so you know what you're getting. So yeah, it's just not really as a sort of long-term hold. I would just rather sort of have one of the, Wimpys and Barretts aren't, they're not £1 million houses, but they're just sort of less complaints, a bit better quality and less sort of sour opinion of them basically. Am I looking to add any more stocks to the portfolio? What's the maximum number of stocks I'll keep? I did open my little Excel sheet of what I've had, what I'm sort of looking to invest in. So this is the ETF side. So I don't own all of these at the moment, but this is what the sort of long-term holds would look to be once if I sort of cash out of all of my, or nearly all of my Bitcoin and gold and silver positions. So I think this gives me a nice diversification. And on the individual stock side, this is sort of pretty much what I'm not necessarily looking to hold all of these because this is quite a lot now. I think sort of 40 or 50 maybe is a bit too much, but quite happy sort of having this as a, basically a watch list, and maybe I'll own 30 to 40 of these at one time and sort of keep the others on the watch list. I think 30 to 40 is reasonable. I don't sort of agree with the idea you have to follow their every move every day. I think that would be more for sort of growth stocks basically, where it is really all sentiment and very heavy on news. I think you can buy someone like Johnson and Johnson and just leave it and put your feet up, go on holiday, and you don't really have to worry a great deal. They might have a slightly bad earnings report and it drops a few dollars or something, but unless they're sort of seem to be killing people, then I don't think it's going to drop tremendously. Similar with the REITs, sort of most of them, will do small gains over time, and you don't have to sort of watch everything they're doing. So I think 30 or 40 is a reasonable amount, and it will probably be 30 or 40 from this selection, basically, in for half of the portfolio, and then the other half spread amongst this lot. Nice one, Alex. Yeah. Remember the last stream we did a comparison of the S&P and 2 other ETFs. I can't remember doing that. Would that be the 2 sort of mid-cap and small-cap ETFs, maybe? Did I go on Portfolio Visualizer? I do quite like this. Let me know if you're if you want to. I mean, you can go on here yourself, obviously, but if you're looking to compare sort of a couple of different ETFs, maybe, or stocks, you can sort of come on here and have a look. I do find that very useful. Similarly with things like macro trends, sort of look up, long-term history of various stocks. Do take a look at, things like Apple every now and then, where people sort of thinking they're making a massively growing profit, where it often sort of isn't really. You go to something like the net income of Apple, and it sort of gives you a fairly long history, and you can sort of see, revenue might be rising a hell of a lot, but you take a look at like net profit, say, they're making, well, it has risen a lot for the last quarter, probably with the sale of the new iPhone, I guess, but throughout last year they're sort of on an annualized 57 billion, say, in profit, and you sort of take a look back, 2015 they were making 53 billion. So I do find macro trends sort of quite helpful for just filtering out the noise and looking at the long-term history of stocks, and not sure how much ETFs side of things they've got on here. Take something like the S&P 500, I don't know whether they have got that in here. No, may have a look at that at some point. Market indices. So they have things like S&P by president. It's interesting. Yeah, and sort of S&P annual returns. Yeah, so they give you, nearly 100 years of S&P annual returns. That's quite useful. You can look at various other indices. So yeah, do like macro trends. Yeah, S&P versus sort of small cap and mid cap. I do bring up a lot of different sort of ETFs and stocks on Portfolio Visualizer. Just sort of gives you, a different outlook on companies. You can look at something like McDonald's, say, versus say Apple, and the S&P 500. So if you say VOO, 100% in all of these. And that'll sort of give you the long-term history. It's going to be thrown out sort of somewhat by Apple, I expect. It's not actually that bad. So yeah, obviously you've got Apple on top, especially on top a lot more recently, but it's, say, trading blows, you know, early parts of the decade, and yeah, I think people are getting a little bit too worked up with the last sort of couple of years, obviously making the pies on trading 212, and you know, it's throwing out 20 or 30% a year. People are thinking they're going to get that forever. You look a little bit longer term history, yeah, you can do a little bit better. One thing to always sort of look at, you'll get this little blue bar that sort of tells you it's restricted by, it'll be the whichever one has the shortest history. So they're suggesting you change the VU for VFINX. I don't think they have the UK tickers in here, so you can't look up something like VUSA, but you could say VFINX, and that gives you a lot more history. So that goes back to, yeah, because all three stocks then go back to 1985. So yeah, you can see Apple sort of had a terrible time of it in the sort of late 90s. It took a long while to sort of even outperform. Even from the sort of mid 90s, it was going a bit bad. I guess that was when Steve Jobs sort of got sacked. But yeah, very helpful. So, see what's happening with the cryptos. So some of my smaller positions doing particularly well. Cardano sort of really making a nice move up. I've seen the Ethereum competitors doing quite well, as well as Ethereum. I see the Dogecoin and XRP sort of nonsense has basically all fizzled out. It's interesting to see the XRP, what was supposed to be a pump yesterday. They were all saying, buy it at 1 o'clock. I think it was 1 p.m., 1:30 p.m. yesterday. Not sure whether it was just this being front run, everyone buying up, for just get rid of those there. So that's the price. Yeah, so you've got 1:30 round about here when it was supposed to be everyone buying up, and they all said everyone buy at 1:30. Obviously that's, I think it was 8:30 in the morning on the US side and late at night on the sort of Far East. Yeah, and people were sort of maybe expecting this, buying early. That caused the price to go up, and it sort of peaked around 11 in the morning in advance of the so-called pump, and then it's sort of a buy the rumour, sell the news event. When it actually comes, just crashes down. So if I was able to, I was at work sort of when all this happened, I may have sort of sold a little bit at these highs. I kind of sort of thought 50p maybe, nice point just to take a little bit off the table, but I couldn't do. I think if it had stayed that price for the sort of rest of the night, then probably would have sold a little bit off, but I'll just hold it for now. So it's just an example of how this sort of Wall Street Bets Reddit type stuff is not all it's cracked up to be. I think you saw it with Dogecoin as well. Although they're all now saying, I think it's Thursday is the big day. Obviously it's had a huge pump up recently, but we sort of take out the last few days. Yeah, so it's had a reasonable pump. They're all saying buy it, buy it. It's going to $1. I've seen some people saying $10. I mean, it's just ridiculous. It's probably sort of large bag holders, as they call them, wanting you to buy it up so they can sell. Be honest, I was one of these people. I sold a little bit on Sunday night when it was back at sort of slightly higher. I think it was 3p. Yeah, I sold a little bit then. I'm not part of the Wall Street Bets crowd or Satoshi Street Bets crowd, so yeah, I'm not taking part in the big pumps. So maybe they're saying stick it to the man, stick it to Wall Street, and I'm on the side of Wall Street. Did I buy the water ETF? I don't think I have, actually. Or if I did, maybe own a small amount. Yes, iShares Global Water. I've got 15 shares, so it's £628. It's up 1.6%. I know it's a slow mover, but yeah, that was kind of what I expected for that. Sort of probably 7 to 10% maybe in a good year. So we'll build that up, but not sort of rushing to buy it just right now. Am I familiar with ExxonMobil? I'm not too sort of keen on them. Kind of see a lot of the American big oil companies as sort of, or maybe not so much recently, but in the sort of later parts of last year, you got BP and Shell sort of going, at least talking really hard about diversifying into renewable energy, and sort of ExxonMobil and Chevron and companies like that were basically saying they're increasing their production of oil, doubling down on oil, and just sort of thought, you need to be diversifying now so that you're making good profit on it when the oil does run out. Yeah. See you, Josh. Yeah. Good to have you here. Yeah, so ExxonMobil just sort of think if they're going to be, running their oil reserves into the ground while it's at a reasonable price, they're continuing to pay a very high dividend. But if you're going to get the share price sort of decaying away, you might be losing 5% share price in a year and getting 7 or 8, 9% dividend, which is sort of an overall fairly poor return. So I'm not particularly keen on Chevron and sort of Phillips. I think it's the other US one, and ExxonMobil. I know Shell sort of aren't exactly coming through with their renewables plans just yet. There's a lot of talk. Appreciate this does sort of take a lot of time to build up. They've said they want to do it organically. You could cynically say that gives them more time to sort of say, well, we want to do it ourselves, so we need more time. A lot of people sort of saying it is just all talk and they're just carrying on with oil. A lot of their financial reports is now sort of dedicated to, renewables and how they're going green, when in reality they haven't really changed that much. But I do still want to hold Shell sort of reasonably long term, just to see if they can move into the renewable side. while also making decent profit on the oil sort of while it lasts. I think they're fairly well placed to get into renewables sort of with the money that they've already got coming in. They're not trying to start from scratch. Yeah, they're sort of big market cap, obviously with, as long as oil's above even $50, I think they're making a reasonable amount of money, and they can afford to just, throw a couple of £1 billion at a new project where, other sort of solely renewable companies would need to issue new shares, diluting shareholders, or take on a lot of debt to fund these new projects. I don't think the renewable energy is particularly profitable at the moment, so it's just harder for them to grow. You've invested a bit in BT, kind of regretting it a little. Yeah, I mean, I am up on my sort of BT position because I got in at about sort of just over £1, I think. I still kind of think long term it can do well. They haven't got a total monopoly. There is sort of other companies, laying their own cables now. We've got sort of a couple of companies around my area, sort of laying their own cable all around. Lots of areas. So that's going to be theirs. They're not going to be renting it off BT anymore. You've got Virgin Media in some areas with their own network, but a lot of the other big players do just still rent theirs off BT, and I still think they'll sort of do reasonably well. EE as well, obviously under their umbrella, sort of seem to be doing fairly well as one of the main phone providers. So I think in the UK they can still do quite well. It's just the only thing holding them back is really the debt and sort of pension deficit, I suppose they would call it still. It's just a big amount. But the CEO does seem to be wanting to reduce the debt and sort of manage their way out, past this pension scenario. I think a lot of the problem is they've still got people on the final salary pensions, and probably still people entitled to a final salary pension when they retire. So I know it's morbid, but as those people start to die off, and new people will just be on a normal sort of pension where you get a pot of money as opposed to final salary. I think of defined contribution they call it. Pension fund should be more manageable. Do I let shares run, or do I top chop, as you say? Yeah, sort of trimming your winners. Well, I am planning to have a weighting. Don't think I've sort of put the percentages. Yeah, I haven't really put my target percentages here, but I do sort of have a somewhat even-ish percentage for all of these. As I say, these aren't my holdings, but these would be longer term. Most of the stocks that I would want to hold, and then sort of, so if Volkswagen, say, is 3% of my stocks portfolio, sort of trying to make the decision on how often I would want to rebalance. Maybe once a year, maybe once every sort of 6 months. If it's got particularly big, up or down move, then I would rebalance. So it would be, if they've gone up, then I would be top chopping, as you call it. And if they've gone down, I would be adding to it. Kind of thinking I can maybe do it with the dividends. I'm hoping not to be obviously spending all of the dividends. So I could sort of top up lower positions with the dividend income that I'm not spending, rather than sort of selling shares and buying low. So yeah, I wouldn't just sort of let them run for years and years. The intention would always be sort of keep them roughly in line with my target allocation. So if one does particularly well, then eventually it would just get spread amongst all of the rest, and sort of overall dividend income would increase. Far too diversified. You want to figure out a strategy to lessen your investments. I don't know. I mean, as I say, maybe if you've got a smaller portfolio, it might make sense to have fewer. I suppose if I've got a slightly larger portfolio, then I like to be a bit more diversified. But yeah, if you've got, say 20 stocks or 30 stocks, if you can keep a general eye on them, every month or two, then I wouldn't think that's too much. I would say sort of if you are just wanting to slim down, maybe just focus on the ones that you've got the most conviction in, really. If any of them are sort of, just sideline ones that you don't pay all that much attention to, or you're not as bullish on them as the others, you could maybe look to, get rid of those and just spread them amongst the rest of them, or just put it into the ones that you've got most conviction in, really. Doesn't have to be, evenly spread out amongst all of them. Do you think it's better to copy a pie from 212's pie library or pick your own stocks? I see a lot of people sort of you can use one of the pies, say, as a starting position, and then sort of maybe, add and delete ones that you don't like. It can work well as a guide if you're very new, but I kind of sort of think if you're very, very new, maybe just go for an ETF until you want to sort of start doing more of your own research. If it's going to be the bulk of your portfolio, using someone else's pie maybe sort of isn't the best idea as the bulk of your portfolio, especially as it doesn't update when they update. It is frozen in time, if you like, and then it's up to you. It's not like sort of eToro's copy trading where it constantly updates with what they're doing. Husk. How old am I? We'll say early 30s. Run with the winners. Yeah, I do kind of agree with run with the winners, but not for that long. If a stock sort of does badly and you're still happy with it, and one's doing really well, but it's starting to really run away with your portfolio, and it's becoming a very large position, then I wouldn't say run with it all that long. Especially if you're in a dividend income type portfolio, probably best to just have it a bit more diversified and just raise that income. You've never touched pies with 212. I think, as I say, they're useful for some things. Sort of probably longer term will change my ARK Invest one to one of the copy pies that sort of copies it exactly on 212. I just at the moment didn't really want all sort of 45 positions in my ISA. Just seems a little bit onerous, but sort of considering maybe copying it and knocking off the bottom 10 or 15, say, and just have 30, and you can just sort of update it once a month by recopying the pie. Seems a little bit easier. I think mine, as I know I say, it sort of tracks the ARK Invest fairly well, but I think it's got a little bit out of touch in the past. I didn't have a very big position in Teladoc, and I sort of checked them recently, and I noticed it's their top position now, I think, or top 2. So yeah, kind of thinking I may switch to a copy pie for that sort of thing. Do you use something like Seeking Alpha or simply Wall Street? I don't pay for any of the services. I haven't really I've used simply Wall Street, as a sort of free account. You get, I think it's 10 stocks a month you can look at. And sort of using that, I've never really sort of thought this is worth £10 a month, say. Yeah, sort of Seeking Alpha I've used for a little bit of sort of research, but I don't know too much about them. I guess it's sort of more focused on US, so obviously I want to get a little bit of information from everywhere on my, I've got a few Asian ones and a few UK, a few Europe, so if something's sort of more focused towards US, certainly wouldn't want to be sort of paying for that and being limited on what I can look at. Investing in pies monthly is a good strategy for the long term. Yeah, I think if you want to be sort of very passive about it, obviously you can go for an ETF. That's sort of something that people would monthly put into, but you can sort of make your own little ETF with a pie and sort of invest in that. You could make it after doing a bit of research and then just sort of leave the allocations and invest in it monthly, and you wouldn't have to do that much research, say. Best to sort of keep an eye on the companies just to make sure they're not sort of going crazy, doing something that you wouldn't want them doing. Just keep a general sort of view on the financials, but yeah, if you want to be fairly hands-off with it, you can just invest in a pie monthly. Just ETF. Yeah, I haven't sort of looked at too many ETF research platforms. I've been using the MSCI website to view a lot of them. So you can say, if you're looking to sort of invest on an index based on an MSCI one, you can say look up the S&P small cap, US small cap value, say. Yeah, and that gives you sort of a little PDF. It gives you the about 13 years worth of performance, compares the ETF sort of to a benchmark, say, so small cap value versus just the whole US market. Sort of gives you the long-term, sort of short-term returns and long-term returns annualized. So, you can see in the last 10 years, say, the general market has done better than small cap value. Gives you sort of going back to 2002 on this too. Gives you dividend yields, price to earnings, forward price to earnings. I have struggled sort of finding forward price to earnings ratio on ETFs. It seems a little bit difficult to find sort of projected earnings for anything except things like the S&P 500, really. So this has been quite useful, and price to book value. So yeah, do find that sort of quite handy. Most of the ETFs that I'm looking at are based on an MSCI index, so I found that quite useful for sort of looking at returns. I expect it's not 100% up to date, but yeah, ETFs aren't sort of something that you need to be up to the minute on. If you're tracking an index, then it's an index, it's going to change all the time. Not something you necessarily have to keep in too much of an eye on. It'll be what it'll be. Okay. Give it a few more minutes for any other questions, and then maybe leave it there. Just seeing where the other cryptos are. Nothing sort of huge moves outside the top 10. Noticing a lot of mine are dropping out of the top ones now as some of these new altcoins are coming in. Not really invested in any of these new ones particularly. I haven't invested in any crypto for probably a year now. I think I did buy a little in the March sell-off, sort of when everything dropped last year, but that was about it. So I haven't got involved in the sort of Polkadot and Chainlink and that sort of thing. Maybe missing out on some gains there, but kind of thought I'm overweight on crypto anyway. I'll just sit with what I've got. Whether it does well or not, that'll come to pass. I know things like Tron haven't done all that well necessarily. I think it's around about double what it was since the bottom, but a lot of coins are done, sort of 5x, 10x even. So maybe some of them not doing that well, but certainly in 2017 it was the altcoins that heavily outperformed my Bitcoin position, so kind of happy to just keep them. And if you make 100% on something in a year, it's bad maybe compared to some other altcoins, but it's good compared to everything else. So I'm not one for chasing returns, buying in at Polkadot now. It's number 5, sort of $15 billion market cap. You're basically betting on it overtaking Ethereum, or you would just hold Ethereum. How long will I keep the Bitcoin? I'm still sort of, again, I did a video, if you want to sort of delve through the past few months on sort of cash out target for Bitcoin and gold, really. So it was sort of rough levels of sort of $50,000, $75,000 and $100, really. I think sort of, hopefully if the altcoins go with it, $100,000 would be pretty much retirement for me. So if I'm sort of selling up there along the way, then just de-risking a little bit. So it's more based on price than it is time. I'm kind of hoping it sort of, the predictions come true and it sort of can get around $100,000 in the next year maybe. Probably wouldn't sell it all, just in case it does go absolutely bananas. Ideally I would like to keep sort of 1 Bitcoin and maybe a 2 or 3 Ethereum and maybe a small amount of some of the altcoins. Another good time to buy Bitcoin and ETH. That's really a difficult one. Obviously I can't just say buy now, but it's been consolidating. It's dropped 30% from the top, from 42,000, and history says in 2017 that you don't get much more than a 30% drop before sort of a new breakout. So, and in 2017 we didn't have the institutions in, so I wouldn't be banking on a huge drop from here. I think the thing you got to remember is, if you've missed out, say, if you've not been in early, sort of worst thing you can do is try and sort of make up for lost time. Taking on leverage, going on sort of Binance and trying to do like 2x, 3x leverage or more, as some people do, or trying to sort of pick an obscure altcoin, trying to be, the next Ethereum or the next Bitcoin. I think personally, if I was getting in now, I would just accept you're going to make less of a return, but hopefully sort of still a decent return, and just accept that it will be less than what some other people have made. Are there too many Bitcoin currencies? Yeah, that is the wonder, really. I mean, you look to the top of here, you've got 8,000 cryptocurrencies. I mean, a lot of these are just jokes, really. You've only got to go to if you go to, say, page 3, so this is, you've got 200, top 200, and then you've got all of these. You look at some of the volume on these, $20,000 in a day. I mean, one guy on Wall Street Bets could sort of move all of that. One guy could be buying up the entire volume. Obviously, some of these are more. Some would probably argue that this is like wash trading, fake volume, and that sort of thing. So, yeah, I mean, that's 200 and onwards. So to have 8,000 of them is just ridiculous. But yeah, a lot of these sort of obviously went bust in. There was a lot in 2017, and then when we had the crash, a lot of them went bust, and they won't carry on. I think probably part of the reason is they won't completely die. They'll just go to, a very, very low price. So something might be 8,000th out of 8,380. I expect if you're looking here, BitConnect is probably somewhere in there. Obviously it crashed and went bust, but if there's one person out there still thinking it's worth something, then yeah, it'll never really die. So it'll just be an extremely low price. What happened with XR? I take you mean XRP. Kind of thinking there won't be all that much come of the lawsuit, to be honest, with the SEC, and it should do relatively well. It's a little bit of a gamble, but yeah, I'm fairly bullish. Obviously, it has had a reasonable pump back up. It was quite a bit lower than it is now, but yeah, I wouldn't take too much notice of the sort of 2017 highs. I think it was sort of $3, $4. I think that was just irrational pump, but yeah, I'd certainly be looking for sort of $1 longer term. Do I do any technical analysis? Not really, not a great deal. I mean, I've sort of shown charts of Bitcoin sort of long term, and the odd sort of wedge where it's narrowing into a sort of thinner and thinner range. That seems to often sort of play out. It'll either drastically go up or down at the end of a wedge, but other than that, I'm not really too keen on technical analysis, certainly not in the shorter term. If I do anything, it'll generally be on sort of at least weekly or monthly basis. Kind of believe in that a little bit more. Coty and Haven protocol, not ones that I've heard of. As you say, back in sort of 2016, 17, I was sort of picking altcoins, and I picked some strange ones. I've still got Power Ledger. I think it's sort of around about 150 at the moment. Picked Civic, which never really moved anywhere, and then just about a month or two ago suddenly had a little pump up, and I got out of it. But yeah, if you pick them well, then you can do really, really well. Obviously, sort of way outperforming Bitcoin, but you're just taking that gamble of whether it will do better than Bitcoin or not. So obviously measuring it in pound value or dollar value is fine, but if it's not doing any better than Bitcoin, then is it worth taking the risk? You bought Sime back in December. To be honest, that is just a bit of a speculative penny stock that I got off the Briscoe forum. Yeah, not really sure. It was just something, on there, and it's very low price. So I was just, if I was making a few buys, putting £500 say in, if I got £10 left, just put it into Sime, into the little penny stock. Sort of gives you a little boost that you can buy 10,000 shares or something. It's obviously meaningless. It is, all about market cap. There's plenty of penny stocks that try and, I think personally, draw people in by issuing billions of shares. So, people can buy £10 worth and get 100,000 shares. Obviously, you don't own any more of the company. You still own £10 worth. So, yeah, it's an interesting one. I know a little about the company, but not a huge amount. So it's only a £60, I think, position for me. So happy to sort of hold that a little bit longer. If it has another reasonable pump, I'll probably sell out of it. Kind of going very defensive at the moment. Bit of a gamble. Yeah, £100. Yeah, I mean, yeah, I think probably between the two accounts I've got £100. Just looking. Actually, it is. I've got £100 in the invest account, 20,000 shares, £99.60, and I think I've got a little bit more in the ISA as well. So doing quite well. 30% up. Maybe wait for it to see if we can get to sort of 75p, or whatever it is, 0.75p. What sources do I use to do my research? I tend to stick to sort of Yahoo Finance for the sort of American stocks and some of the European ones that they offer analysis on. They seem to be fairly good for financials for most companies, but they don't give the sort of earnings analysis on many companies outside the US. See, they do for something like Nintendo, but if you sort of look at most UK stocks on here, you'll tend to see like current year as 2018, which is sort of obviously out of date. Not quite sure why they do that, but I'll sort of use macro trends, quite handy for sort of longer term analysis. If I'm struggling, I might just, with like a UK stock, sometimes use like Hargreaves Lansdown. They sort of give you, say, 5 years of financials. It's not quite as detailed as Yahoo Finance say, but they'll sort of give you balance sheets and income statements and that sort of thing. The NASDAQ website also gives you sort of decent earnings analysis. Tends to be less analysts on there. So we'll normally look, take someone like Lockheed Martin. I think if you go on analysis, there's 21 analysts. I think if you go on NASDAQ, there's often sort of between 5 and 10 analysts for the bigger companies. So I think Yahoo is quite good for the sort of earnings analysis, but they only tend to give you sort of current year and next year, where NASDAQ obviously it's a bit speculative, but they make a prediction on sort of 3 or 4 years out as well, and they sort of give you things like projected growth estimates on here and quite a lot of stuff. So yeah, I find Yahoo Finance pretty good. As I say, I'm not all that keen on paying for reports. Obviously, you get with things like Simply Wall Street, you can log in and have a free account, and if you haven't used that many, you get a reasonably good report on there. Especially for I tend to use that for the UK companies if I can't find a lot of info. So you get 10 free ones a month. I think it's 10 free ones a month, so that's quite handy. Obviously, if you want to go further with them, you can pay, but I find the information a little bit sort of, I don't know, a little bit off sometimes, especially with their sort of, this stock is undervalued by 60% or overvalued by whatever. It's sort of uses an algorithm type formula, and just seems a bit unrealistic sometimes. Sometimes incredibly bullish, sometimes not. So not all that keen on a place like Simply Wall Street. The Charles Schwab site. Yeah, I've never. That's an American broker, isn't it? If you live in the UK, you need 25k to start an investment account. Yes, not really sort of one that is easy to look at here. Do struggle with UK analysis on, or analysis on UK companies and some European companies. Market Screener is another one that isn't too bad. They sort of give you a couple of years, say. Just have a quick look at them. So you get, say, if I want to look at a European one, something like Siemens, you may not get particularly good info on Yahoo Finance. So you can look up financials on them, and they'll give you sort of, they do give a little bit of projections, say 2 or 3 years. Get their sort of predictions of dividend yields and that sort of thing, earnings per share estimates, and it's not too bad. It doesn't sort of say how many people are analysing this, where it's come from or anything, but it gives you a reasonable estimate. Obviously with like US companies, you can check it elsewhere. You can sort of compare these with things like Financial Times and that sort of thing do give an estimate on UK companies, but yeah, a little bit more difficult. It's a lot easier with US companies. Opinion on the cannabis industry. Not a lot, to be honest. Not something I've ever done, and yeah, not sort of, don't really have any thoughts either way. I guess if it's got its medicinal uses, I'm a little bit sceptical of how much of it is really medicinal, but if it's getting legalised, then more of an American play. Wouldn't be keen on investing in it, to be honest. A little bit speculative, and you are kind of sort of betting on America only. Okay, so I shall probably leave it there. Good to have you all on, and catch up with you soon. Cheers, guys. No problem. Probably do another one maybe in the next few weeks, sort of late February. Oh, go on, Husk. One last question. Did I work in the financial sector when I was younger? No. No, never been in the industry. It's always just been a hobby, really. Always been a math sort of person, so yeah, not really something I wanted to do. Obviously, you have to go to university, and was never really particularly keen to do the whole sort of student debt, you know. Mainly in London as well. Didn't really want to move to London, so no. Okay, we'll see you guys soon.